Canadians living in Hong Kong, moving back to Canada. Hi, my name is David Wu, Chartered Professional Accountant, and in today's video, I'll talk about Canadians who are living in Hong Kong but planning to move back to Canada, and what are some of the 7 common tax questions that they have. So number 1 is on your residency status. So if you're planning on moving back to Canada, and this will be your permanent home, permanent resident, then you will be classified as a resident for tax purposes. However, if you will be moving back and forth between Canada and Hong Kong, the government will look at whether you have established significant residential ties in Canada. So this would be looking at, do you own a home in Canada? Do you have immediate family members living in Canada? And how many days are you living in Canada each year? Question number 2 is, what happens to your assets in Hong Kong? So what happens is, on your date of departure, the Canadian government's going to assume that you sold all your assets at market value. This will create a new cost base for your assets for determining future capital gains. Now, what you can do is you can sell your assets prior to coming to Canada and convert that to cash, or you can hire a valuator to assess the market value of your assets at the time of you leaving Hong Kong. So that will create the new cost base for future capital gains or losses. Question number 3 is, what happens to the money that you move to Canada? Will that be subject to tax? The short answer is no. Money that you bring from Hong Kong to Canada will not be taxed. Now, what about the $10,000 reporting requirement? If you bring over more than $10,000, you will have to declare that when you come to Canada. However, that doesn't mean that you have to pay tax on that money. All it means is that the government wants to know the source of your income for anti-money laundering purposes. So it just means that you need to answer some more questions about where that money is coming from. Question number 4 is, while you are in Canada and you are a resident, what are your reporting requirements for your foreign assets after arrival? So if you own foreign assets over $100,000 Canadian, you are required to report on Form T1135 when you file your Canadian income taxes. Okay? So this will include any rental properties that you have, any cash in a foreign bank account, stocks in a foreign or owning foreign stocks. Question number 5 is reporting foreign income. So as a Canadian resident, you are subject to tax on worldwide income. So any income that you make in Hong Kong or anywhere in the world, such as interest, rental property income, stock trading, investment income, you need to declare on your Canadian tax return. If you have income taxes deducted in that foreign country, you can claim a foreign tax credit to help to avoid double taxation. Okay, question number 6 is buying real estate in Canada. As residents in Canada, you will not be subject to the 15% non-resident speculation tax in Ontario. However, you will still be required to pay land transfer tax unless you are a first-time home buyer, in which case you can have access to the first-time home buyer rebate. Lastly, question number 7 is, when you bring over money from a foreign country, there most likely would be some foreign exchange gains or losses. So if your foreign exchange gains are more than $200, you will need to declare that as a capital gain and report that on your Canadian tax return. Okay, so this is the 7 common tax questions relating to Hong Kong, Canadians living in Hong Kong moving back to Canada. So for more details, make sure you check out my website at www.davidhwu.com. Thank you. Bye now.